Okay. Can online students hear me? Okay, we can go ahead with the. So, question is this: businessman resident in Kandy also furnished bungalow in Bandaravela, which he generally occupies during the season period April to May for 2 months. 1 month is kept for the cleaning before his and family occupy it, and the balance 9 months is going to rent it out for 5,000 per month. So the rental value of the bungalow is based on the rating assessment of the Bandaraville Urban Council is rupees 30,000. That means the rental value would be the 30,000. The council rates are 10% of the annual value. The broker's commission is 2,500 and upkeeping furniture is 2,400. So in this case, that means owner is going to use this property periodically, not continuously. The balance part he is going to use it for the rented purpose. So in that case, you have to you are going to rent this house with the furniture. In that case, without furniture, unfurnished house you have to calculate the value, then furnished house you have to calculate the value. First we look at the what with the furniture benefits, how we are going to calculate. Okay, profit on furnishing. So rent received, the same format which we have earlier discussed. Rent received 5,000 into 9 months, because for the 9 months period you have given it for the renting purpose. Okay, 45,000. And rental value, that is a rating assessment, is rating assessment for the period of occupied by the owner. The rental value, they are given that the rating assessment, based on the rating assessment, the rental value is 30,000. Okay, so for the 30,000 for 3 months, because even though they have used for 2 months, 1 month is kept for the vacant for the upkeeping of the furniture. Total 3 months we are going to consider it has been used by the owner. Okay, so for the 3 months, 7,500 altogether, 52,500 is a income. Then from that you have to reduce the expenses. Agent commission 2,500 they have incurred, expenses for upkeeping of the furniture 2,400, and rental value for full year 30,000. Okay, so if not, you can adjust. Without adjusting this 3 months occupational one, just you can deduct rental value only for the renting period, that is 9 months. Straight away if you are going to deduct, it is okay as well. Okay, then you can arrive the profit on furniture. How much? 17,600 would be the profit on furnishing. That is only one part. That is, if you are going to give this bungalow with the furniture, what would be the furniture renting out benefit? Still, now we are going to identify the empty bungalow. What would be the benefit? Empty bungalow income would be what? If it is an empty bungalow, because with the furniture you have identified furniture income is this much. The second part would be the empty bungalow. The empty bungalow means what? Is a net annual value of the bungalow. Profit on NAV. Okay. Rental value, that means the rating assessment plus rate. They are given this straight away 30,000. Then rating assessment. Normally rental value means the rating assessment plus rate. Some questions you are giving that the directly rating assessment. In that means the rating assessment plus rates are included. But in order to calculate the NAV, you need to have the rating assessment, because from the rating assessment you are going to deduct the 25%. That means they are given the rates are 10%. Okay, so that this 30,000 included these rates, you have to divide it 110 and multiplied by 100 in order to get the rating assessment. The rating assessment is 27,272. So from that you have to deduct the 25% for the repair. So normal calculation, but here you have to make some adjustments since you are having the total value rating assessment plus rates. So the NAV is 20,454. Okay, so that taxable income, both empty bungalow and the furnishing profit. So 70,600 would be the furnishing benefit plus empty bungalow income 20,454. In this case, you are going to take the empty bungalow profit for the whole year, not for the vacant and the occupied by the different one or not. For the whole year, you are going to consider as a taxable income. So that altogether the owner need to pay tax on 38,054 rupees on that holiday bungalow. Okay, this is relating to if the owner is going to rent it out the holiday bungalows or whatever the property with the furniture, but make sure that periodically owner is going to occupy that property. The question is that the rent 5,000 per month. In this case, we are not going to the previous one. When we calculate the net rent, in that case, owner is not going to use that property within that period. But in this case, owner also going to use that one. That means we cannot purely give it to the tenant. So in that case, when we calculate in the furnishing one, we consider the rent receipt. Because for the 9 months we are going to use and for the 3 months owner is going to use. So in the furnishing benefit, we are going to amalgamate then that whatever the rent received. For the other one, for the empty bungalow, totally owner occupies, we have to consider it as a totally owner is occupied. In that case, what would be the income? Then maybe this one is a special one because previous one we are not going to intervene the tenant to within this period you have to use for yourself. For this 3 months period we are going to use no any rules and regulations. Totally we are going to give that property to the tenant for the full year. But in this case, we are going to use it for the tenants for the certain period. The balance period owner is going to use. If such a situation is there with the furniture, normally if the owner is going to use means definitely there will be the furniture. Okay, without furniture, so owner cannot use for the seasonal period even, so that definitely there will be the furniture. When we calculate the furnishing benefit, you have to consider it as a rent income. Okay. So after the break, we'll discuss the balance point. Okay. So, there is before. Okay. So, we'll start the session. After all, we discuss the rent income. So, just we look at on the exemption. So, in this case, the owner can claim the exemption if it is used for the residential purpose only based on the construction. So, if the floor area does not exceed 1,500 square foot, so that if it is constructed prior to 2008, so that 7 years he can claim for the exemption on the rent income. In previously we discussed it is based on the NAV. Now because the owner is not going to use for his own purpose, but now he is going to rent it for the third person. If the construction has been done after 1st April 2008 and the floor area is less than 500 square foot, so that owner can claim the exemption for the rent income for 5 years. Okay, so that is exemption on the rent income. The second one would be rent received by business. In this case, companies, the business persons, they are going to letting out the business premises for the rent purpose. In this case, taxpayer should claim the actual expenditure on rates, repairs and other expenses as they allowed as a deductible outgoing and expenses. But in the previous one, when we calculated the net rent, the repair restricted to 25%, but in this case they can claim the actual expenses where a part of the business premise is let and part is occupied. The part let has to be assessed as from the rent. That means partially they have to identify what would be the income. So this question, Sen & Sons is a jewelry business carrying on activities in one story of 2 stories building owned by it. Sen & Sons is a company now. So that for a one floor they are going to use their business, and the other floor they are going to rent it out for 150,000 per month. Rates and repairs are to be shared equally. They assume that they are going to share. And annual rates amount to 40,000, which is 20% of the rating assessment, and the repairs is amounting 300,000. So calculate the rent income of Sen & Sons. In this case, so normal rent income you have to calculate. How we are going to calculate the rent income? So you have to calculate gross rent received by the Sen & Sons. From that you have to deduct the rates. In this case, rates they have paid for the whole 2-story building. They identify that equally they are going to, because actual payments now they can claim. Okay, so in that case 20,000 would be the rates, and repairs as well is for the whole 2-story building. So that 50% for that one as well, 150,000. So that income from rent would be 1,630,000, because rent received total 150,000 into 12 months. Rates they are going to equally distributed, so that half of the 40,000, then repairs half of the 300,000, So the income from rent is 1,630,000. Okay. So this will be applied other than the companies and the partnerships. So you have to make sure that for the individual businessmen, they can apply, they can calculate this income, but for the companies and the partnerships, they cannot claim this income from rent. Third one would be furnished houses and flats without owner occupation. Okay. They are distinguished from holiday bungalows in which owner occupies periodically. And earlier one we discussed the holiday bungalows. Okay. Now this is for the furnished houses and the flats. Okay. Where flats and houses are furnished and rented out amounts higher than if unfurnished. That means if it's unfurnished, without furnished, if they can rent it out, the unfurnished rent is to be separated from the rent from furnishing. However, the net rental value, net annual value of the periods when the property is vacant will not be assessed on the owner as it is kept for vacant for his use. Okay. So in that case, flats and other houses, again we have to calculate the rent income for the unfurnished rent. But for the holiday bungalows, what will happen? For the unfurnished house, we calculated what? Net annual value. In this case, we are going to consider the rent income. Then profit from furnishing, this would be the two parts. Okay, this is example. Mr. Vipul, a gem merchant in Ratnapura, has a furnished house in Colombo 5, where he has rented out at 60,000 per month. The Colombo municipality has assessed the annual value as 200,000. He bears the rates and cost of repairs. The house was vacant for 3 months. Cost of upkeeping of furniture, advertisement, etc. are rupees 40,000. Rates are paid at 20%. Compute the income from property for year of assessment 2015 and 16. This is not relating to the holiday bungalows, it is relating to the houses and flats. So in this case, with furniture and the without furniture, he has chance to give it to the renting purpose. In that case, you have to calculate the without furniture, what would be the house benefit, that means the rent income. Then furnishing benefit is how much. First we look at profit from furnishing, because both profit from furnishing and the unfurnished house you have to get the income. So we received the rent from only from the 9 months, so that 540,000 would be the rent received for 9 months, and then from that the similar calculation what we have done under the bungalows furnishing benefit. Okay, so I have mentioned that if you can add rental value the unoccupied period here, or just ignore that one. So in that case I have used the second method. So straight away from that you can claim upkeeping, advertising and the brokerage is 40,000, and from that again you can deduct the rental value for 9 months, because they have rented out for the 9 months. Rental value means the rating assessment plus rates. The rating assessment is 200,000 plus rate 40,000, altogether 240,000. From that you have to take only the 9 months. Okay. So because only for the 9 months you have used for the renting purpose. So that 180,000 you have to deduct, so that this would be the profit from furnishing would be 320,000. Then rent unfurnished. Okay, second part would be the unfurnished, so that rental value for the 9 months. Okay, so 9 months because for the 9 months 240,000 into 9 months, that is 180,000. From that you have to deduct rates. Okay, for the 9 months 30,000, so that net amount would be 150,000. On that you can claim 25% for the repair expense, 37,500, and net rent is 112,500. So that net rent would be 112,500. So altogether total income from letting is 432,500. The difference in between holiday bungalows and the flats and the houses is what? Furnishing benefit is same, no any change, only the unfurnishing. For the holiday bungalows you are going to take NAV, but for the flats and other houses you are going to take the net rate. Okay, that would be the difference. So that total 432,500 would be the total income from letting. Okay. Third one is occupier's income. Up to now we discussed net annual value. Net annual value means owner's income. Second one would be the rent income. Rent income means the owner is not going to use the property by himself. Instead of that he is going to rent it out for the third party. The occupier's income means in the tenant's perspective, the person who is going to occupy the owner's house or the property. So in his angle as well, sometime there will be the income. Occupier's income is the benefit occurred to a tenant. Such benefit does not arise if the tenant pays a rent to the owner which is less than NAV. In this case, definitely in order to take this occupier's income opportunity, tenant should have to pay rent to the owner. If not, we cannot take this occupier's income. So how we are going to calculate? In which situation occupier's income may be arised? In which situation? We have discussed it earlier. Under the rent income, first we calculate what? Net rent. Then you compared it with the net annual value. If the net annual net rent is greater than the net annual value, no problem, we are going to take the net rent as a rent income. But the problem is, Even though we have rented out for the third person, still the net rent is less than the NAV. NAV normally we consider is as the minimum income of the property. If any case the net rent is less than the NAV, so I have mentioned that the rent income is what? Rent income would be what? The net annual value. But in that point itself, you cannot take the net annual value as the owner's income. I have mentioned in that point as well, there may be a possibility of occupier's income as well. If there is occupier's income, you have to calculate it separately and you have to deduct that occupier's income from the NAV, then take the net amount as the owner's income. Now we are going to study what we mean by the occupier's income. So how we are going to calculate the occupier's income? Okay, so net annual value, you have to take the net annual value. From that you have to deduct rent paid by the occupier. That means it is similar to gross rent reduced by the owner. The other tenant's perspective, rent paid by the occupier. So if it is a positive one, that means the net annual value is greater than the rent paid by the occupier, there will be the occupier income. Okay, that's how we are going to calculate the tenant income. Just look at this one. Identify the occupier's income, if any, to the tenant under the following situations. You have given straight away given the gross rent paid by the tenant, or otherwise gross rent received by the owner, and the NAV of the house or the property. The second situation as well. Can you just calculate whether there is a occupier's income or not? Okay, first one, there is no occupier's income. How? Because in this case we have to take first NAV, from that you have to deduct the gross rent paid by the tenant. In this case the gross rent paid by the tenant is greater than the NAV of the house, so that in this case the tenant occupier's income is not there. But the second case, NAV minus 180,000. So in that case 20,000 occupier's income is there. In such a situation, what would be the owner's income and what would be the occupier's income? First situation, no occupier's income, because in this case definitely net rent should be less than this 200,000 and the 200,000. That's why you are going to identify whether there is a occupier's income. I haven't put the net rent here because due to this net rent is less than the NAV, we are going to identify the occupier's income. So that since the net rent is less than the NAV, definitely this NAV would be the owner's income. But still we are going to check whether there is a occupier's income. In the first case, there is no occupier's income. So what would be the owner's income now? Is exactly equal to NAV of the house, that is 200,000. That would be the rent income of the house. Okay, rent income would be the 200,000. In the second scenario, again the net rent is less than the NAV, but we have checked whether there is a occupier's income. Yes, there is a occupier's income 20,000. In that case, what would be the owner's income? Owner's income is, in this case, we are going to calculate the rent income. Rent income is not exactly equal to 200,000, but from 200,000 you have to deduct what? Occupier's income 20,000, net of 180,000 would be the owner's income or the rent income. Okay. Now we are having with 3 figures. Next one, determine the rent income to the owner and the occupier's income, if any, to the tenant under the following circumstances. Now we have already calculated gross rent paid by the tenant or gross rent received by the owner, then net rent of that particular property, the last net annual value of the property. Then you have to identify first we have to look at what? Whether the net rent is greater than the NAV. If the net rent is greater than the NAV, you need not to bother about any other thing, just you have to take the net rent as the owner's income. In that case, you are not going to consider whether there is occupier's income or whatsoever. If the net rent is less than NAV, then you have to look at whether there is occupier's income. If so, you have to adjust that one. Okay, case by case, can you calculate what would be the owner's income and the occupier's income? Okay, shall we look at the answer? Okay, because we have to identify income to the owner and whether there is a occupier's income. In the first case, net rent 200, basically you have to compare the net rent with the NAV. Okay, now net rent is 250,000, NAV is 200,000, so that no issue, net rent is greater than the NAV, so that net rent would be the owner's income. Net rent, that is the rent income, would be the 250,000. In this case, no occupier's income is there. Second scenario, net rent is 172,500, but NAV is 200,000. That means net rent is less than NAV. So in that case, the rent income would be the NAV 200,000, but still we cannot decide whether the NAV would be the final income, because there is a possibility of having occupier's income there, because the net rent is less than the NAV. So before finalizing that, you have to check whether there is a occupier's income. How we are going to calculate the occupier's income for here? From the NAV, you have to deduct the gross rent paid by the tenant. In the first column, 240,000 would be the gross rent paid by the tenant, but the NAV is less than that, so that there is no occupier's income. 200,000 minus 240,000, in that case you are going to identify there is no occupier's income. So the NAV would be the owner's income as the rent income, 200,000. Again, in that case, no occupier's income. Third situation is that net rent is less than the NAV, so that NAV would be the rent income, but you have to check whether there is occupier's income. Yes, there is occupier's income, because NAV is 200,000 minus gross rent paid by the tenant 180,000, 20,000 occupier's income is there, so that owner's income, that is the rent income, would be 180,000 and the occupier's income would be 20,000. So if you are an owner of that property, you need to pay the tax on this 180,000. If you are a tenant, you need to pay the tax on this 20,000. Okay. So this is about the property, income from property. Under that we discussed three main areas: net annual value, rent income and the occupier's income. So in this case, net annual value is relating to the owner's income. That means owner should have to occupy it by himself, or on behalf of himself any other person will be occupied for the residential purpose, not for the commercial purpose. You have to keep in your mind. Then second one would be the rent income. That means owner is not going to occupy it by himself, but he is going to rent it out for the another person. In that case, you have to calculate the rent income. When you are calculating the rent income, you have to first take the net rent, then you have to compare it with the net annual value. Then if the net rent is greater than the NAV, no problem, that would be the rent income. So there is a occupier's income. Third one would be the occupier's income. So in that case, you have to compare the net annual value with the gross rent paid by the occupier. If so, there is occupier's income, you have to adjust that for the rent income. As well as we have discussed some of the special cases as well as the exemptions under the rent income and the for the net annual value. There is no special cases under the occupier's income. Okay, this is a very small the income source, and I promise you to upload detailed note on these areas. I have already uploaded those things, and you have to go through those information, and next week I will make it available for the employment income. I will put a detailed question, overall question. Try to attempt on that, because for the final exam as well, there is a individual employment tax calculation question. So I will make it available, the practice questions. You have to attempt on that one if the time is there. So then finally I will make it available the answer as well. And make sure that your individual assignment is due on 24th December, and put it into assignment calendar as well. So I have make it available already, make it available the assignment guidelines. It's an individual one, and these are the things I need to be remind you. If there is no clarifications or queries, we can wind up little bit early. Next week we need to cover two areas: interest income and the dividend income. After that, Mr. Rangala is going to take part the taxation lectures. starting with the business income. Okay.